Hello guys, welcome to Sense Charting. Today we'll see what happened in both the indices, Bank Nifty and Nifty 50. Starting with Bank Nifty, as you all can see on the screen. So market is kind of going in a particular trend that is called raising wedge. So this particular pattern is called raising wedge, and market is respecting that particular pattern and going in that direction. So today also market opened gap up, and once it has reached 47,200 level where it has opened gap up, so we can see that this particular shooting star low is also that particular level 47,200. So as soon as it reached that particular level, the sellers they started selling the market, and then market move the market downwards. Once it has reached this particular support line, so this particular support line it has reached, and what at 46,700 level, the PE sellers they were not ready to exit, and also 47,800 level, these both PE sellers they were not ready to exit to move the market further downwards. That is where market took a rejection from that particular point and gave a closing at yesterday's closing level. So if at all market has to go down, Bank Nifty has to go down, this support line has to take out with a good decisive candle, else it will try to test this particular resistance level and try to go up. So coming to Nifty 50 also open gap up along with Bank Nifty, and as soon as it opened gap up, the market started coming down. So in yesterday's video, we decided that if at all these particular wicks or these particular candle lows are taken out, that is where we can see a little bit of down movement in Nifty 50. So today it has crossed that particular wicks, and from there it has moved around 100 points. So now as soon as it reached this particular level 20,750 and 20,800, PE sellers they are not exiting. That is why it took a rejection from that per point and formed a doji candle in daily time frame. So let's analyze them in a shorter time frame to understand how these particular charts are moving and how to make an entry using those charts. So coming to Bank Nifty, as we can see, this particular first 5 minutes candle itself, the market started going down, and we can see this rejection over here. So here we can say we can take an entry and keeping this low as a stop loss, and as soon as we enter over here, the market started going down. This stop loss is not taken out, so as it tried to reach our entry, and from there it got rejection and reached to 46,700 level. There it got some rejection in this particular moment, so we were able to catch 47,000 to 46,000 46,700 level. So this particular moment we are able to catch, and then the market went on sideways and formed a double top formation over here. So now we can see a double top formation in the 5 minutes time frame. As soon as this particular pattern is formed, we have a breakout, and here we can enter into a trade and keeping this particular low as a stop loss, and whenever this is crossed, it is trying to reach this yesterday's low point. So as soon as it reached the market, it stayed sideways and retested this particular 47,000 and stayed above that particular zone and gave a closing at 47,150 level. That is where yesterday market has closed, and that is where today market has given a closing. Went to that yesterday's closing point and gave a closing. Coming to Nifty 50 in a shorter time frame, so market, if you can see, yesterday it has reached 20,850 level, and here it got a rejection. And also, if you guys can see, two hammers were formed over here, and as soon as these inverted hammers are formed, the market went down from that particular level and reached that particular zone and gave a closing. Today it has opened exactly at that point and rejected from that level exactly. Also, if we guys can see here, it was testing this particular level yesterday's low point multiple times, and here in this particular candle exactly it gave a closing. So that means this particular support, whatever yesterday it has taken, that is taken out, and that is why we can consider this particular point as an entry and make a short position out of it. We can enter in this at this closing point and keep that high as a low, high as a stop loss, and we can assume 1 is to 2 or 1 is to 3 is our target. So it formed a lower high and again trying to form a lower low and again formed a lower high. So lower high and again a lower low. So if you're looking for a short position, we should wait patiently and we should follow the trend if it is forming lower lows and lower highs. If you're looking for a long position, we should wait and look for a whether the market is forming a higher highs and higher lows. So here our target is achieved, 1 is to 3, and now here we can see the market is completely going sideways for a half an hour. So that means the here over here the market is trying to accumulate their positions. We can say the PE sellers, they're trying to accumulate their positions over here in this particular zone. Here we can see a breakout, but this particular breakout compared to this low, the body is not completely below this particular zone. Body is half of the body is above in that zone only. If at all body is formed till here, we can say this it can go further down, and this particular 20,800 PE sellers would have been given up. So now if we can see over here, this particular zone is properly taken out and half of the body is closing above. So now we can take a long position over here and enter over here and keep this particular red candle low as a stop loss, and we can keep our target as 1 is to 3 ratio. As soon as it has given a closing, it has formed higher high, higher low and higher high and higher low and higher high. So this is where we reached our target, and also it has reached this yesterday's low point. So that is where I'll exit my position. So this is how we have to look the market trend and track open interest positions and enter accordingly. So thanks for watching. Please like, share and subscribe to Sense Charting.